Hi everyone, welcome back to the channel. Today we're diving into the latest updates in finance, crypto, and AI. Let's get started. Leading US banking associations are urging the Office of the Comptroller of the Currency to pause trust bank applications from digital asset firms like Ripple and Circle. They warn approving these could create regulatory loopholes, allowing non-bank firms to enjoy bank privileges without proper oversight. They're calling for a full public rulemaking process to decide if digital asset firms should get trust charters. Meanwhile, Senate Republicans have released a draft framework to clarify crypto oversight. Led by Senator Tim Scott, the proposal aims to define digital assets under federal securities laws better. It suggests some tokens could be self-certified as non-securities and calls for joint rulemaking by the SEC and CFTC to close jurisdiction gaps. President Trump's proposed economic bill could boost the federal deficit by $3.4 trillion over 10 years, mainly due to extending tax cuts from 2017. The Congressional Budget Office warns it could also cause 10 million Americans to lose health coverage. While the administration expects tariff revenues to offset the costs, economists warn that higher prices could hit low-income households hardest. The global crypto market has hit a new high over $4 trillion. Bitcoin surged past $120,000, with some analysts predicting it could reach $200,000 by year's end. Ether has doubled in value over 3 months, and crypto stocks like Coinbase are climbing, showing growing institutional confidence and momentum in the sector. Finally, Trump is preparing to unveil a national AI strategy to keep the US at the forefront. The plan aims to boost innovation by easing export controls, speeding up data center permits, and expanding Pentagon AI use. It's a shift from Biden's approach, focusing on accelerating AI development and reducing regulatory hurdles. Now, let's take a look at the economic indicators for this week. First, let's talk real estate. In June, existing home sales fell to 3.93 million, slightly below the forecast of 4 million and down from May's 4.04 million. High mortgage rates and affordability concerns continue to weigh on the market. But over in new home sales, the picture is a bit brighter. Sales came in at 627,000, just shy of expectations, but an improvement over last month's 623,000. So while affordability remains a challenge, builders are still seeing demand. In energy, crude oil inventories posted a much steeper drawdown than expected, negative 3.17 million barrels versus the forecast of 1.4 million. That's 2 weeks in a row of large inventory drops, suggesting stronger than expected demand or tighter supply. On the jobs front, we got good news. Initial jobless claims fell to 217,000, beating forecasts and improving on last week's 221,000. Fewer layoffs point to a resilient labor market, always a strong pillar for consumer spending and economic stability. But manufacturing is showing signs of strain. The S&P Global Manufacturing PMI dropped to 49.5, slipping below the 50 mark, a key threshold between expansion and contraction. It also fell well below the forecast of 52.7, hinting at cooling demand and a potential slowdown in industrial production. Meanwhile, the services sector is going strong. The services PMI jumped to 55.2, well above the expected 53. This signals continued strength in consumer-facing industries, a reassuring sign for the broader economy. And finally, a big reversal in business investment. Durable goods orders plunged 9.3% in June, following a massive 16.5% surge the month before. While slightly better than the negative 10.4% forecast, the steep drop raises questions about business confidence and capital spending moving forward. Next week, market attention will be focused on key economic indicators and earnings reports including CP consumer confidence, ADP non-farm employment change, Fed interest rate decision, unemployment rate, and month-over-month average hourly earnings. Meanwhile, several major corporations are set to release their earnings reports including Welltower, Waste Management, Cadence Design Systems, United Health Group, Visa, the Procter & Gamble, PayPal Holdings, Spotify Technologies, Barclays, and Sophie Technologies. Now, what does it all mean? The US economy continues to show resilience in some areas like services and labor, but faces headwinds in manufacturing and business investment. That's it for today's roundup. Did you like this breakdown? If so, hit that like button, subscribe, and ring that bell for your weekly macro updates. Thanks for watching, and we'll see you in the next video.